A few general housekeeping rules. Please be sure that your microphone is muted. And if you have a question, please use the question in the Q&A function located at the bottom of the screen. You may also send questions to sacsinfo@cde.ca.gov. Earlier today, we did send a copy of the agenda and additional documents that we're going to be discussing today. If you have not received those documents, please email us at sacsinfo@cde.ca.gov so you could obtain a copy of the handouts. Next, we'll do the announcements and information. Derek?
Okay, thanks, Rigo. Hello, this is Derek. So as Rigo mentioned, this morning's email, there's also attachment that lists the coding and reporting issues that we noticed during our most recently completed review of the 2021-22 unaudited actual submissions. So as per usual, we typically ask that whenever you have some spare time, next couple of days to kind of go through each one and review it. And if you have any additional questions, just shoot us an email through SACS-info. But there are a couple items that I kind of want to go over quickly today. So if you actually open the attachment, and if you go down to, just a second, if you go down to page 7, yeah, and it's regarding the CMO fees or the Charter Management Organization fees. So during our review of the ICR calculations for charters, we're still noticing that many charters are charging the entire amount paid for these oversight fees to function 7200, which is the other general administration classification. So for these fees, it's always been our understanding that these oversight services involve not only accounting, reporting, or maybe personnel activities, but there's also involvement in curriculum development, as well as like just overall school administration. So we think it's appropriate that part of these CMO fees should be charged to Function 2100, which is the instructional supervision and administration, which is curriculum development, this is part of, and Function 2700, which is school administration. Okay. Yeah, and actually one more. So the next one, kind of want to go over quickly, is located on page 5. So apologies for going out of order. So at the bottom of the page, the administrative costs. So and these are the back office accounting fees, or fees paid for back office accounting services. So for small school districts and also charter schools where there isn't like a centralized district business office that's managing the administrative activities for like multiple school sites or campus sites, we think that most administrative services are attributable to school administration, Function 2700, and not general administration. So for this expenditure, we do recommend using the standardized distribution in lieu of time documentation, which is allocating 70% of these costs to school administration, Function 2700, and 30% to other general administration, Function 7200. And this follows our CSAM procedure 905 guidance for staff performing support duties for both school administration and business office administration. Yeah, and that's all I have. So like I said, whenever you have some time, please go through the entire list. And if you have any questions, please feel free to shoot us an email the SACS-info. And I believe next up is the bid threshold.
Okay, thank you, Derek. So I'm here to discuss the bid threshold adjustments. So we sent out the letter in December to LEAs, and I just wanted to provide you with a quick summary of the bid threshold over the last 3 years because we saw a substantial jump this year. As you can see, we went from a, oh, we copied the wrong threshold into it, but there was a change of 10.32% in the bid threshold this year. So just be aware of that moving into as you do contracts this year and go up for a bid for various contracts, that there has been a substantial increase. And this is, as I mentioned before, this is provided as a courtesy to LEAs. Whether or not you should be following the regulations surrounding the bid threshold is a determination that you should be making as a district with your legal department. Next slide, please. Next slide, please. Thank you. Okay. So also, I wanted to take some time to go over the Every Student Succeeds Act, or ESSA, per pupil expenditure reporting. So all LEAs are required to complete their ESSA PPE reports, and we did have 3 webinars outlining our reporting requirements in January and February, one of which will be posted on our website, hopefully by the end of this week. We will also be posting an updated slide deck on our website by the end of the week. As of last week, approximately 1/4 of LEAs have submitted their reports, so we are eagerly awaiting the submittal of additional reports from those LEAs that have not submitted. As a reminder, the LEAs should review the facts on our website or reach out to us at essappe@cde.ca.gov with any questions. And the deadline for completing this requirement is on March 1st, 2023. And next up, we're going to hear from Rigo with some accounting reminders.
Thank you, Hillary. The first accounting reminder is for the school-based medical administrative activities, also known as SMAA, and the LEA medical billing option programs, also known as LEA BOP. On October 2020, we informed LEAs that the Department of Healthcare Services, DHCS, determined that LEAs are considered contractors, not subrecipients. As contractors, LEAs are not required to report the funding on the schedule of expenditures of federal awards. Due to this change, LEAs had to change how they accounted for these programs. Originally, LEAs would account for the SMAA program using resource 0000 unrestricted with object code 8290 all other federal revenue, and would account for the LEA BOP using resource 5640 Medi-Cal billing option with object 8290 all other federal revenue. To align with the DHCS determination, CDE proposed that these programs be reported as local revenue with the following accounting changes. For the SMAA program, it was proposed to change the revenue object code from 8290 to 8699, all other local revenue. And for LEA BOP, change resource code from 5640 to resource 9010, other restricted local, and object 8290 to object code 8699. The proposed change took effect in fiscal year 21-22. During UA reviews, we noticed LEAs are still using the original accounting guidance, causing warning TRCs to appear during data submissions. LEAs can reclassify the beginning balance from resource 5640 to resource 9010 using object 9795, other restatements. Next, we have Agnes.
Thank you, Rico. Good morning, everybody. This is another accounting guidance, and actually, like for the object 8625, the community redevelopment funds not subject to LCFF deduction, now supposed to be really only with restricted resource only. And with the unrestricted resource, that combination has been closed since July 1st, 2018. Actually, this we also included with Derek mentioned about that attachment on the page 1. So if you want to see more detail, you can see that. And actually, we already talking about that in May 2018 SACS forum. And then for the other object code, 8681 developer fee, we also already talk about that, in October 2018 SACS forum, that, will close the combination with the object 8681 with the resource code 000. And we already did that. So that combination no longer valid after June 30th, 2019. But somehow, during our review for this, last fiscal year UA submission, we still see some LEA using those combinations. So basically, this is just another accounting reminder. Next, please. And other accounting reminder is really regarding for the classified school employee summer assistant program, resource code 7415. This particular program for the state match fund is really just for the actual salary expenditures only. Any additional expenditures like the statutory benefits, they should not reporting using this resource code 7415. And during our review with this prior year UA data, we saw that some LEA continue using making contribution into the resource 7415 in order to for the benefits. And we just want to remind LEA, please don't do it. Next slide. Because why? Because when you're doing this, that it will cause a SACS, TRC, and also at the same time, the contributions really distort, the expenditure reporting. And this is really the whole idea why we did not make the contribution object code open to this particular resource, because we want to make sure this program, the expenditures really just for the actual expenditures, not for the other expenditures, even with the benefits. And next, now I will have Rico to talking about Jody talking about the validation tables.
Thank you, Agnes. This is Jody. I just have a really quick update on our validation tables. So our last release was on January 20th, and it includes the following 4 resource codes that are on your screen. Resource 6333 for the California Community Schools Partnership Act Coordination Grant, 6383 for Golden State Pathways Program, 7033 Child Nutrition School Food Best Practices Apportionment, and 7339 for Dual Enrollment Opportunities. So we are still providing the files and posting them to our webpage. The webpage address is https://www.cde.ca.gov/ac/validcodes.asp. And we are still providing those for those LEAs that opt to use the tables in their local accounting system. And on that webpage, there is also a link to join the listserv if you want announcements of new updates coming out. So one change I wanted to mention was those of you who are familiar with the SACS legacy system, which is no longer with us, but back in the SACS legacy system, it was necessary for us to post the files on the web, and each user had to go to our website, download the files, and actually go into the SACS legacy system and run the update validation process within the software. That was the only way the software would be updated with the correct code combinations. So the good news is with our transition to the SACS web-based system, this is no longer necessary, and all the updates to the valid codes and combinations are done behind the scenes. So there was an update to the SACS web system deployed on January 31st, and that included all of the new resource codes mentioned. So you should be able to use that with no issues. We are working on a few new resource codes, the Prop 28 arts funding. We're looking into that, and I believe we have another child development resource code in the works. So no timeline on those, but they are on our radar. So if there's no questions, I will pass it back to Rico. Thank you.
Thank you, Jody. So on your screen, we have a frequently asked question associated to the Home to School Transportation Reimbursement Program. It states, in the Home to School Transportation Reimbursement FAQ webpage, it indicates that indirect costs are an allowable expense for transportation. However, it seems that this amount would not be included in the reimbursement. For example, if CDE pools cost based on function 3600 and indirect costs use function 7210, then these costs will never be included. Am I understanding this correctly? Is there a way to code the indirect costs so they would be included in the reimbursement? Yes, there is an accounting adjustment that can be done to capture indirect costs for this program. However, such accounting adjustment may adversely affect the LEA's preliminary proposed indirect cost rate. Our guidance is, if an LEA would like to report indirect costs for reimbursement purposes, the LEA will need to transfer a proportionate share of indirect costs relating to the program from function 7200 to function 3600. Here's an example of the accounting adjustment. As mentioned in the previous slide, this accounting adjustment may adversely affect the LEA's preliminary proposed indirect cost rate. This is because such expenditures will be removed from the indirect cost pool and be added to the direct cost base. We highly recommend for each LEA to determine the extent of the effect on their ICR. Items an LEA should consider include the amount of expenditures being transferred from function 7200 to function 3600, the amount of indirect cost pool, and the amount of the direct cost base. Next, we have Agnes.
Thank you, Rico. Okay, this time we're going to talk about the GASB 96 again. Basically, the GASB 96, the subscription-based information technology arrangements, and I think sometimes we just call it speeders. I mean, myself, I really have a hard time to say this acronym. Just another reminder, say this has been effective in this fiscal year 2022-23. And I just want to put the definition out there one more time to remind everybody. This definition is really, really similar to the GASB 87 leases. Basically, it's a contract that conveys control of the rights to use and other parties as speeder vendors information technology software alone or in combination with tangible capital assets, the underlying IT assets, as specified in the contract for a period of time in the exchange or exchange-like transaction. Next slide. So again, similar to the GASB 87 leases, this one has really 4 key elements in order to meet the definition for the GASB 96, and all must be met in order to be classified as a speeder under the GASB 96. The first thing is control. Second is the underlying IT software. Third, subscription term. And then lastly, and most important, is it has to be an exchange or exchange-like transaction. Next. So that is really a little bit the GASB 87 and versus the GASB 96. So if you really talk about the truly is just a tangible capital assets alone, then you have to follow GASB 87 basis. If it's just the IT software alone, then you have to follow GASB 96. But somehow, if you have a contract including both the IT software in combination with the tangible assets, then in that way, you have to consider thinking about whether that cost of the software component is really insignificant when compared to the cost of the underlying tangible capital assets. In that way, will be you have to follow GASB 87. And one of the really good example for this one is like all this now we call the smart computer, the smart copier, because yes, the copier really does come with some kind of software component to it, but that is really insignificant compared to the copy machine is themselves. So for that sense, you should follow GASB 87. But otherwise, then you should follow GASB 96. Next slide, please. Another concept, under the GASB 96 is for the cost of the activities with this speeder is they have 3 stages. The first one is the preliminary project stage. For that, you should just as an expense. And the second, for the initial implementation stage, that should be capitalized as part of the subscription assets. And lastly, the operation and other additional implementation stage, those should be just as expenditures. Next slide, please. With the GASB actually, they have a new proposed implementation guide updates for the 2023. And right now they still in the, they call the comments period, and they scheduled to be released in June 2023 this year. And with this new proposed implementation guide, they do have 3 questions on the speeders. And that's why I would like to share with everybody, because during the implementation, it will help out a little bit. First, the first questions, they're talking about is a licensing agreement for a vendor's computer software that automatically renews until canceled. Is this really talking about, is it really this truly is a perpetual license? And the answer they say, GASB say no, because to them is if that contract has a provision automatically renews until canceled, it's more like they have an option to terminate the agreement at each renewal date. Because since they have an option to terminate, that is not a purchase. If it's not a purchase, then means it's not a perpetual license. Next slide. And in the second question included in the proposed implementation guide is, if a government enters into a 6-year speeded contract with no option to extend or terminate the contract and begins making semi-annual subscription payments to the speeded vendor immediately after the contract takes effect, the initial implementation stage is not completed until the end of the 2nd year after the contract takes effect. What is the subscription term? And the answer is 4 years. Because why? Because the initial implementation stage is completed at the end of the 2nd year of the contract. So therefore, the subscription term should start at the beginning of the 3rd year and ends at the end of the 6th year. So the totally subscription term, when you calculate your subscription liability, should be 4 years, not using the 6 years. Even though the 6 year is really based on the legal language, but technically for accounting purpose, the subscription term is 4 years, not 6 years. Next slide. And the last, question they included in the implementation, the proposed implementation guide they're asking about is, does a cloud computing arrangement meet the definition of a speeder? And then the answer they say, basically they say, well, may or may not. So means, you have to really make the determination whether this cloud computing arrangement meet the definition. And the definition is really important is you should evaluate whether the contract conveys control of the right to use the underlying IT assets in accordance with the GASB 96 paragraph 7. So I think, for this means, if you really have doubts about any cloud computing arrangement, you should really work with the IT folks. I believe they should be the more the experts to make a really better determination whether it's really meet the definition or not. Next slide. Thank you. If it's really a short-term speeder, and then when we talk about a short-term speeder means that if the subscription term is less than 12 months, then we consider them as a short-term speeders. If it's really a short-term speeders, that means all the payments should be just recognized as expenditures, as an outflow of resource in that current year. And we thinking about the examples will be you can use the object 4100 if it's really for internet-based or computer-based state-adopted core curriculum. And for the other, just a regular, maybe internet publication and materials, object 5800 should be used. Next slide, thanks. Then, how about the accounting for the speeder, not the short term, but the other regular speeder under the GASB 96? So the accounting for this, in the governmental funds, I just provide example here. For example, if the subscription start date is on July 1st, 2022, and the end date is June 30th, 2027, and then we're going to make the first payment on the day, July 1st, 2022. And the payments would be $15,000 annually, but we pay in advance, means we pay on July 1st. And we assume the discount rate is 5%. Next. So, and hopefully, maybe the agreement continue this amortization schedule, but we can work with it. So you can see that for the subscription payment for the $15,000, some of them is really paid back to the principal, sometimes is really for the interest. And then, you can see the balance for the subscription liability at the end of each year. Next. So again, like what I said, this is a kind of example for you accounted in the governmental funds. So at the start of the speeder date, July 1st, you should recognize the capital outlay. We do have a new object code, 6700. Then you should debit your subscription assets for that amount. That amount in the previous slides for the subscription, the amortization table is at 68,189, and then you will credit a proceeds from the speeders and object 8974 for the same amount. And as I mentioned, both the object 6700 and 8974, they are both new object code we developed because of the GASB 96. And when you make the first payment, this is a first payment and also it's a pay in advance. So you will debit, just like the object 7439, other debt service principal for 15,000, and then credit your cash for 15,000. And later on, when you make your second subscription payment on July 1st, 2023, and go back to that amortization table, then you can tell part of that 2,659 is belong to the interest. So we will, debit to the object 7438 for the debt service interest. And the other rest, the 12,341 is belong to the principal. So the debit the object 7439 and credit the cash now $15,000. If anybody have any questions, just let me know. And but basically, this is really the accounting entries, for the governmental funds.
Thank you, Agnes. I know we all learned more about the SABITAs. It's always more information comes out. So thank you so much for that, Agnes. So next, we're gonna move to our next item, which is accounting discussion.
Rigo, I'm going to stop you for
Yes.
just a second. This is Jody. There is a couple questions.
Okay.
For the SPITA, Agnes, Carter is asking, how do you determine the 5% discount rate?
You know what? This is like what I say is an example. So, and hopefully in the contract, they were talking about the discount rates. If not, you as an LEA, probably you have to determine your rate. And because we are governments, one of the way you they can think about is whatever your borrowing rates. If you go out to borrow, something, what would be the appropriate rate? And definitely not a long term, but you will think about hopefully consistent, also thinking about the subscription term. So basically is you have to make your own determination. And I see that there's some questions asking for Rico about the transportation. And I think, Debbie talking about, can they use, function 3600 with the object 7310 for the indirect, create a fatal error of function times objects? No, I think, Debbie, I think, in our early slides, we don't use our object 7310 because we are aware of the situation. That's why we propose if you were to do that, we'll be using the object 5710 and transfer as a direct cost instead of as an indirect cost. And I think Maria's had the same questions about the function 3600 with the object 7310.
Okay. Yeah, so for transportation reimbursement, if change the function to 3600, would that be valid with object code 7310? And I believe that answer is it would not be valid. Okay. Okay. So now we'll move towards the accounting discussion. So for accounting discussions, this is the first time joining us. It's topics that we have become aware of, and we're looking for input from LEAs to inform us of their position with this new information that's come out. So next we have the first topic we have is the proposal to close LCFF transfers, objects 8091 and 8099, funds 11 and 14 for JPAs. And I believe that's Agnes.
Yes. Okay. I think it's a previous slide. Yeah. Thank you, Rico.
Mm-hmm.
We are going to propose, in this fiscal year, in the next, fiscal year 2023-24, we're going to close the combination, means, the object 8091, the LCFF transfer current year, and the object 8099, LCFF, transfer per year to fund 11 and 14, but only for JPAs. Because what happened is, in 2013-14, when we opened, object 8091 and object 8099 to fund 11 and 14 in order to allow LEA to commit the LCFF money to be able to use the fund 11 and 14 in 13 and 14. And that year, we just opened that combination in error for JPAs because technically, JPA, they really do not receive any LCFF apportionment at all. So really does not make sense. We will have this, LCFF transfer object code open it for JPA. So that's why we propose to close the combination Fund Object 8091 and Object 8099 to Fund 11 and 14, but only for JPAs. So if you guys have any questions or thinking about, have any concerns, please let us know. Okay, then next, I'm going to pass on to Blanche to talking about another proposal. We're thinking about to open special education goals to Child Development Fund, Fund 12. Hey.
Thank you, Agnes. Good morning, everyone. So there has been some changes in the California State Preschool Program beginning in fiscal year 2022-23, pursuant to Education Code 8208. The CSPP contractor is required to set aside 5% of funded enrollment for children and with exceptional needs. And that requirement increases to 7.5% in 23-24, and then to 10% in 24-25. And then moving on to the next slide. So we just want to bring out this discussion whether with these eligibility requirements, should special education goal codes 5,000 be open to Fund 12? There has been an updated early education management bulletin 2302 that you could refer to for more information. In that bulletin, they do mention that there has been an added eligibility category, which is what I mentioned. It's the 5% set aside. And so we have been receiving some inquiries from the field, whether if asking that if the goal codes 5,000 would be open to Fund 12. And from the review from the unaudited actuals and the recent 21-22, we have seen some LEAs using 5,000 goal codes with Fund 12, because those are just a warning TRC. So we've noticed this increase in the use of 5,000 in Fund 12, and we want to bring it up to the field and ask if you think Fund 12 should open with 5,000 goal codes. We'd like to get your feedback, any pros and cons. We don't have any intention of opening it yet. If we do, it would be based on your feedback, and we would open it in fiscal year 23-24. So please send us your feedback to sacsinfo@cde.ca.gov. And if there are no further questions, I will pass it on to Veronica, who will have the SACS web update.
Thank you, Blanche. Hello, this is Veronica Monteverde, and I'm going to present the SACS web system updates today. We'll start with the reporting period release dates, because we did release the 22-23 second interim reporting period about a month ago, maybe a little less, but it was released on January 20th, so that was a big deal. And the things that we have coming up for the next releases are going to be the 22-23 end of year projection reporting period. We expect to have that out by mid-April. And then, of course, we're working on our 23-24 budget reporting period. Anticipated release date for that's going to be mid to late April. And then going back to 22-23 for unaudited actuals, we're hoping to have out by late June. Next slide. For the 22-23 unaudited actuals, wanted to bring a few things to your attention. So, of course, it's going to be the first time the unaudited actuals is going to be available in SACS Web, and it's going to be available in the SACS format as well as in the UA charter school alternative form. So the alt form and the SACS format are going to be available for 22-23 UA period. And it's just a reminder, it's only going to be available in SACS Webs. As you know, we're no longer supporting or developing the SACS legacy software, and we won't be doing the SACS, not SACS, the legacy alt form format as well, the one that we post to our website every year. That won't be happening anymore. And since all charter schools are going to be reporting their UA financial data in SACS web system, whether it's in SACS all or in the alt form format, we want to send a pretty strong reminder that LEAs should start planning for adding and training charter school users that haven't yet been added to the system. That sneaks up on us pretty quickly. I know it's a few months away, but it's going to sneak up pretty quickly, and it does take quite a bit of time to plan for, you know, who the users are going to be, what the roles are going to be, adding them and getting them able to access the system and all that stuff. So please remember that planning should be starting for adding and training the users, for charter school users. Next slide. I'm going to get into some of the proposed changes for the 23-24 budget reporting period. This is by no means not all the changes. This isn't all the changes, but it's just some that we thought you might be interested in. So we thought we'd highlight them, starting with criterion standards. Criterion 2, LCFF revenue, and this is for counties only. Pursuant to AB 181, hold harmless county offices include a COLA add-on amount. So we will be modifying this criterion to incorporate the COLA add-on for hold harmless county offices. There's going to be a couple lines added for to allow county offices to enter the projected county operations grant and alternative education grant to calculate the COLA add-on amount. Next slide. Sticking with criterion standards, this time we're looking at district only for criterion 7, facilities maintenance, specifically looking at line 2 for the ongoing and major maintenance restricted maintenance account calculation. That first line there of resources in the bullet that's listed in that first bullet, those are new resources that we're going to be adding to our existing list of resources that are going to be that are automatically excluded from the total budgeted expenditures and other financing uses calculation. And this means that district won't need to do any workarounds for these or manual exclusions that we had people had to do for the 22-23 interims. And the last bullet there is just a reminder that resources 3210 and 3215 are going to be removed from the RRMA exclusion beginning 23-24. Next slide. Now we're going to talk about some of the changes that that we're making in the forms due to GASB 96. Agnes did a detailed presentation earlier, and this is not going to be detailed. This is just quickly show you some of the places that are touched by the GASB 96 statement, and just to give you an idea of what we're looking at when you open the forms and run the TRCs and stuff like that. So here we have, of course, it's effective 22-23. All these funds here, I'm not going to read them all, but all those multitude of fund numbers there, those fund forms are going to be getting these object codes added. So this object 6700 for subscription assets and object 8974 for proceeds from SPEDAs. I have a hard time saying that too, I guess, SPEDAs. Next slide. And this list of funds, are going to get these 4 new object codes, because we do have 6 new object codes for it, and for GASB 96. And so for these are some of the proprietary and fiduciary fund types that are going to have these 4 object codes added to them. I won't read them all. Next. Form asset is also affected. We are going to be adding 2 lines to form asset, subscription assets for object 9470 and accumulated amortization subscription assets for object 9475. It'll be added both at both sections, the governmental activities and the business type activities. And then there is a TRC, a related TRC, the asset accumulated depreciation amortization negative check is also going to be looking for the object 9475, looking for the line in form asset. Form debt is also affected. So it's going to have a new line added to it as well for subscription liability, object 9660. And again, it's going to go just like an asset, it's going to have a line added up at governmental activities and down in the business type activities. And the TRCs that are the debt related TRCs that are also affected by this is the debt form activity and the debt positive TRC change for ending balances. Also, so that's it for the software changes, or at least the highlighted ones for budget period only, right? We still have UA coming up, and there'll be lots of changes, more changes for that. But for now, these are the highlighted changes for GASB's 96 changes for the budget reporting period. As far as general information, I wanted to talk just a teeny bit about publishing functionality in SACS Web. I'm sure anyone who's in an oversight agency knows that when we're promoting data sets, we only want it promoted to LEA oversight complete to that state. We don't want it pushed over to LEA published because the system's not ready for that. And wanted to share that the publishing functionality is going to be a priority after we release the UA reporting period. So thinking back to that first slide, we release second terms, we're going to release end of year projection, we're going to release budget reporting period, and then UA reporting period, right? Hopefully late June. And after that, a priority is going to be developing the publishing functionality. That question's been coming up more often, so we thought it'd be kind of good to let you know what the status of that is. And that's all I have. Do we have any questions? You know what? There's a question here that says, will there be any training on the unaudited actuals? I don't have the answer to that. I'm not sure, but I will find out, and we will, I guess, what do we usually do? Post them in the notes or in the minutes?
Yes.
Okay. All right. It looks like that's it. So I am going to send it back to Rico. Thank you.
Perfect. Thank you, Veronica, and thank you for all that information for the updates for SACS Web. Next, we have some other items. I'm not seeing any other items at this time. So our next meeting is scheduled for May 16, 2023. And thank you all for joining us today. We're going to stick around for a couple more minutes in case there's any last minute questions. If later on throughout the day you have another question, remember you could email us at sacsinfo@cde.ca.gov. Thank you.